Good morning. Welcome to OptionsTender. We're doing something a little bit different today. We will go through SPX on the daily and the 65, so we can check out those indicators. Yesterday, I took the day off and went disc golfing with friends and family, and so we're going to look at those because we want to see what happens as we catch this turn here in the market. And clearly, you can see market breadth is just awful, god awful, but the market is holding up, and we all know why. Okay, Nvidia is holding it up almost single-handedly at this point. So as soon as that lets go, then you're going to see the market start its correction, aka what I keep saying, crash my headline to get more viewers on YouTube. So I'm not, that's no secret. So can we get one correction and make a new high? I'm not going to count on that, but that's possible. So we'll talk about that in a little bit. But what's important is the overall big picture of things. Okay, so we're really looking at this 10-year interest rates at TNX. And the reason why I'm looking at this so often, it's been going sideways. And you know the basically Fed fund rates, Chairman Powell, he hasn't been doing much with the rates, okay, cutting or raising rates. And I know that you're going to get different points of view from this, but I'm starting to lean at the point where this is just a consolidation for a breakout to the upside. And so there's two things that can happen. If the rates break to the downside, I actually think that's a better situation because that's going to stimulate the market overall in the big picture after we have a recessional correction. So you'd have a recession either way. We're in the sweet spot right now. But if you break to the upside, you're going to get a stagflation situation. You break to the downside, you're going to have a recessionary situation and recover from it. Okay, so we're going to take a look at SPX on the back in the 1970s. If this starts to break out, then that's going to confirm that situation. It doesn't mean that the market's going to do exactly what happened in the 1970s, but it certainly is going to probably move in some sort of pattern that's sideways. So I think we can all agree on that one if interest rates break out. So interest rates are very important to the economy. And how will it, kind of impact things? Higher interest rates, that's going to affect mortgages, auto loans, credit cards. So you can imagine consumer discretionary items are going to be impacted the most. And then you have your businesses that suffer from borrowing. So that's, of course, there's the government debt servicing and stuff like that that come into play. But we're not going to speak on the government situation so much. More of the impact on the stock market and the wheels of the economy. So in general, if this starts to break out, then you're going to see a lot of strain on the markets. But if you think about it, then what about tech? What about big tech? And the problem with big tech, they'll probably be just fine. The companies' health will, so they'll probably maintain most of their profitability, most of their dominance over the markets. But there's a big chance that valuations get out of hand because of the rising interest rates. Okay, so that could cause the big tech stocks to sell off as well. So it's not going to be, in my opinion, a safe haven, and they continue to pull the market to the upside. All right, so this is not a 1990s situation where 1995 you just continue to just skyrocket and have much higher prices, all from tech. All right, tech evaluations are already outrageous, and with the breakout of interest rates, that's going to affect there. So I hope that makes sense to you. Let's go over to SPX. And let's look at the 1970s. I have this drawn out because I brought this situation up in the past, and I wasn't sure that I thought that rates might break down, and I'm starting to lean the other way to where they're going to break out. So first of all, this is a sideways move from the 1960s all the way to the 70s. We had high interest rates, which peaked in the 1980s at as high as the Fed fund rates as 20% under Paul Volcker's administration, if you will, being the Fed chairman. Okay, and I think you guys know, if you're new here, maybe you don't. My take on the market, or excuse me, on rates, the bond markets are rule all. So rates rise and the Fed funds have to move with it. Okay, it's not the person, the chairman, who has all of this power and moves rates whichever way he wants to do it in order to affect things. He has to move rates with the overall treasury yields. Okay, and so that's why that person, it doesn't really matter to me. All right, they're just the bank of the banks. All right, so they lend money out to the banks, and so they have to keep the interest rates aligned with the overall treasury rates. All right, I hope that, again, that's a big, long subject, but that's in general how it goes, in my opinion, of course. All right, so in each of these, in this entire move, this is almost 20 years. Say it's about 27 years if I had to argue, from 1965, let's call it, all the way sideways. No real movement, no real growth until 1982, where you had a breakout and a back test, and then nothing but movement to the upside, contraction to expansion, right? That's just on a higher scale, the monthly time frame. So each of these moves here were a bear market, essentially. Now, this one was only 23%, but it hits that 20% that people talk about being a bear market. So that's why I put these on here, so you can see that even with this expansive move here, and maybe the other one is contractive, okay? Meaning that maybe we have a triangle that contracts and then we break out, 10 years later or so. And this one was an expanding diamond formation, also known as a wedge here, okay? And then you had sort of a triangle here. So you had 23, almost 24% bear market here, almost a 40% bear market here, a 50% bear market here. Insane moves. And then the 1980s bear market was also almost 30%. So just huge breakdowns and then recoveries. So I could expect something like that happening in this inflationary period. Okay, and then when things peaked, when interest rates were up to 20%, that's when the markets knew already. So it was already breaking out of its pattern. And when that peak happened, it caused a sell-off, but really that was, this first initial move here. All right, and that was just a back test of this entire pattern that was forming. And so that's what I wanted to really bring out here. There's, this historic trend line that we look at every single week. That's where we're at. That's where we're rejecting off of. Nothing has changed for me, even though on some people's 5-minute charts, they're like, we're making brand new all-time highs. Oh, he's so wrong. He's so wrong. Well, that's fine and dandy, but anyway, I'm not, haters, right? So we're rejecting off that 1929 trend line once again every single day. We're probably even going to get a new high going tomorrow if the pattern works out correctly. So we'll show that on the 65. Now that we have that extension that I talked about in last week's video. Over the weekend on the 65-minute, I said, hey, unless this is an extension, and we probably won't go much further above it, meaning like an ending diagonal or something like that, where we just like inch above and then break down, inch above and break down. Okay. So that's what I think long term is happening. This could be just a really, so we have this channel that's created, right? This is a potential channel. And so what could happen is we have perhaps a sideways move until we get to this channel bottom. So we may do it. It's still possible we could just do it in price. There's nothing that says it can't happen. I was thinking because of the strong companies, it's going to show strength, but it's going to be overwhelmed with interest rates and costs. So this could be just a sideways move rather than a big reset before going higher. All right. And that could take us a good over 10 years. So 2025, it could be all the way out here to 2035 where we have some sort of maybe triangle. Maybe we get a big move down and just contract sideways until a breakout. Okay. I don't expect like a flat pattern like this, for example. It's possible because if we're on a higher degree wave 4 or a 1-2, if you see a 1-2 as sharp move, a 3-wave move, zigzag, then I think that's the big time reset for 1-2, and then we continue with an expanding move here, or extension, excuse me, where this is, instead of that being done, wave 5, that ends up being a wave 1 into wave 2. So that could be a sharp move. That could be it. And then that could seem like it's contracting because of the nesting that has to occur for this next wave up. Okay. So that's possible too. So you have a sharp zigzag, and then you start having the large moves that get sold into. Very similar to, let's say, this is the beginning of a move. So you have that large move sold into, this is nesting. This is a 1-2, 1-2, 1-2. Let's look at after the Great Depression. This is a big move that retraced, it looks like over 50, 60% of this crash, and then a big sell. So that's a 1-2. 1-2, you see what I mean? And then you finally have this ascending triangle that you break out from. All right, I don't know if you can see that, but from peak to peak, you get rejections off until you finally break out from there. And then you have this little back test and so on. I do hope this helps give a big picture, but we're going to reset. No matter how that takes place, we're going to reset. And I think it's off of this point that we're at right now. So let's go down to the daily and start to figure some of this stuff out on the lower time frame. All right, so here's that 1929 trend line that we're just rejecting. And again, this could make it a little bit higher, and I'll show you on the 65. But what does it look like? So here's our moving averages. Just barely holding this 8 EMA. When that lets go, it's going to hit this 20 pretty quick. I think it's going to come down at least to the support area around 6150, but really pretty quick. And a positive, again, we're in a bullish posture here. And we have the McClellan oscillator just falling. This is going to affect the summation index when we look at it on the weekend. Breadth is getting worse. The market's going to see that tumble. Remember how long it took breadth to get into bear territory? That's when you finally had a top. So you had a little fake out there. But once you got into bear territory underneath the 0 line, that's when the top started to come in. You had all of this negative divergence in the positive area. Even underneath here, breadth was getting very, very bad. And then you finally saw the top right here, right before it was into that bear territory. We're into the bear territory. Okay, the top is right here. The top is here. All right, your MACD. We finally got a crossover today. Yesterday, again, was nothing. There was really nothing to show yesterday because we didn't make new highs. We didn't have a red histogram on the daily. So there was nothing that really changed. We're getting a crossover on the daily time frame if we close like this today. We had negative divergence once again on RSI on the daily time frame, and same thing with the slow stoke. DMARC. DMARC, we had that 913 count. Are we going to get up to another 9 count here again? It's possible. We have 3 days to do that. Let's see. No setup yet. Well, I mean, we had our setup here, but if we get another one, could get another setup. Awesome oscillator. Turning negative. Divergence, negative divergence once again. Let's go to SPY to get some of these other indicators. The money flow index. Again, this is really good at catching turns in the past, and it takes time. It takes time to play out. I say that over and over. It doesn't have to take much time, but you see these divergences once they happen. It can take, from here to the next divergence, it took 29 trading days to get there. And I argue this one here, actually 43 days for it to happen, with price going up in a spanning wedge here and then breaking down. This one took months for the stop. But this is a huge, higher degree top here. And this is even bigger. So this, in my opinion, this whole thing is a topping pattern. It's a Wyckoff distribution. And in the near term, lower high, and this is rolling over again with this brand new high here. Negative divergence. I know I keep repeating myself every day. Same thing. Bollinger Band, we already had our sell. We're just going sideways to up. Volume shelf. Oscillator with this new high, still lower high in this very near term. All right, let's go to the VIX. And now the VIX, we're just dancing. We're just having this dance here. The VIX already bottomed. Okay, we showed those cycles. We have this nice falling, this bullish falling wedge here. We had this cycle low where we bottomed out, and we're in this rising phase here. And so you see price action for the VIX. It's already started its up movement. Okay, we didn't break out yet. Had a false break, but all it did, these couple of days that gapped up, they basically gapped up with fear, but are giving the markets fuel when they pull back. Now it's getting a higher low, but it gaps up and pulls back, and then the market goes just a little bit higher. Okay, you get this gap down here, and that gave us time. Again, this move up here is giving us market structure, so we're getting a higher low, and so this gap down for the VIX gave us just a little bit more fuel for SPY and SPX and ES to go just a little bit higher. All right. And so if we do get another down day tomorrow, with a gap down in the VIX, again, the market can go just a little bit higher. And that's the game it's going to play until VIX starts to break out from this pattern here, from this overall pattern, but this new structure with a high and a higher low and then a new high, I'm sure the market will be already in descent at that point. If we go back to SPY, we'll just finish up with the 65-minute. And you can watch the weekend video if you want to know exactly where I think the market is heading. The two scenarios that are going to play out, in my opinion. And so we had this new wedge that formed here. We broke down from it. We're back testing with just a new high here, but I think this is possible that I can take these out. We had a trade on that went against us, so that trade did not work out. And I will put on another trade with the new high here. All right, because I think this is a pattern now where we're losing momentum and could get a new high right there. So how do we get that new high? What would that look like? It's just a wedge that's dropping, and this is a 3-wave move to the upside for 1. And it could have been a 5. That could have been done. You can count 1, 2, 3, 4, 5 if you wanted to, but this is now considered a 3-wave move in my opinion. Eking out a new high here. So instead of this being wave 5 and done, this is now a 1. Okay, that's extension. That's how you work out extensions. This could have been a wave 5 done, but it came down and held for, now it's a 1, 2, 3, 4, and we're getting another 1, 2, 3. It's an ending diagonal. They're all 3 waves. 4. This should hold probably right here, right where we're at. And we should get a 3-wave move up for one last wave 5 here. Okay. And that might end up being overnight. A lot of these things happen overnight. Gap up, and then I'll add on more swings at this point to the downside with these divergences that happen here. So here's your moving averages, kind of holding on to sideways to up. I'm calling OptionsTender. Set up MACD is curling over again, but again should get one more high here. Of course, I'm not playing that high. It's not going to be very much, a few pennies higher. Negative divergence, and should get one more divergence here. It doesn't have to. We already have swings on. So if it just if it's done here for whatever reason that this wave count is done, we're already in position for it. D-mark. Got a 9 count in this one as well. That gave us the little bit of sell-off. Let's see if another one occurs. Awesome oscillator. All those negative divergences continue. Money flow. We're getting distribution. That new high. Once again, negative divergence occurring in the very near term. Bollinger Band, look how tight that's getting. Very tight price action. And we got a sell signal with negative divergence and just reaching the overbought situation. So that's a sell right there. Are we going to get continuation? Not sure we are yet. Like I said, might get one more little peak there. Volume shelf, Elliott oscillator. This thing is going to continue to do the same thing. And we're going to get one more peak if it's not done already. All right. So that's what we have there. Yeah, we talked about the wave counts. We're not going to go through all the scenarios. Here's your 3. Wave 5 could have been done here, but now it's extending 1, 2, 3, 4. We should get one little more there, and we'll go from there. All right, you guys, I hope this information helps. Don't forget to like and subscribe. Thank you all for the support, and have a wonderful day. We'll talk to you tomorrow.